Right now, as the market is live, BioKey International, ticker BKYI, is trading at $1.76.5 per share. That is an astonishing move, up 99 cents, or more than 129% on the day. The stock gapped up at the opening bell to $1.90 and has seen a high of $1.97, and it is doing this on volume that is simply staggering. We are looking at over 174 million shares changing hands in the first 30 minutes of trading. To put that in perspective, this stock's average 30-day volume is around 127,000 shares. This isn't a surge. This is a biblical flood of orders. This is more than 1,000 times its normal trading activity, a number so large it's hard to even process. And the most important part? This is not a random, baseless social media pump. This is a violent, fundamentals-based repricing of a company that just yesterday the market had left for dead. The expectation for BKYI for anyone who even had it on a watch list was that it was just another sub-dollar microcap, a company in the biometric space that was perpetually struggling, burning cash, and facing NASDAQ compliance warnings. It's the kind of stock you'd scroll past on your Robinhood app or SoFi Invest platform, dismissing it as a lottery ticket not worth the risk. The reality as of 9:55 a.m. Eastern Time is that BKYI is one of the most watched, most traded stocks on the entire market, and it's all because of a single press release that hit the wires at 5 a.m. this morning. That press release announced a new strategic partnership with I2 Trust, one of Scandinavia's largest and most established distributors for IT security and networking solutions. This isn't just a small-time reseller agreement. I2 Trust is a major player that will now carry BioKey's full suite of identity and access management solutions, including its Portal Guard and identity-bound biometrics platform to enterprises and public sector organizations across the entire Nordic region: Denmark, Sweden, Norway, and Finland. This is a massive new sales channel in a region that is notoriously difficult to break into and is hyper-focused on security and data compliance, like GDPR. The market's expectation was that BKYI was a company with no growth story, stuck in the US. The reality is that it just gained a powerful, trusted partner to attack a completely new and lucrative international market. The market cap, which was hovering around a tiny $5 million just last week, has effectively doubled this morning. This is what happens when deep, overlooked value meets a powerful catalyst. The sheer volume, 174.6 million shares, tells you this is not just retail traders jumping in for a quick flip. That kind of volume suggests that algorithms, trading desks, and potentially even small institutions are scrambling to build a position, trying to get in before the price completely runs away from them. The entire float of the company is likely turning over, perhaps multiple times today. This is a complete and total reset of the stock's valuation. Looking at the intraday action, this isn't a simple pop and drop. The stock opened at $1.90, hit that $1.97 high, and has since pulled back to the $1.76 level. This is classic consolidation after an explosive gap up. Early traders who got in pre-market are taking some profits, while new buyers, who now have had time to read and digest the press release, are establishing new positions, setting a new floor for the stock. This isn't like watching Apple stock or Nvidia stock trade. This is a microcap discovery. This is the kind of volatile, life-changing price action that many traders hunt for. Of course, with that volatility comes extreme risk. Trading on platforms like Fidelity or Interactive Brokers might be more stable, but anyone attempting to trade this on a mobile app is likely experiencing multiple trading halts due to the volatility, which is a standard NASDAQ circuit breaker mechanism to calm the markets. The spread between the bid and the ask is likely wide and erratic. This is a professional's trading environment, not a place for casual online investing. But the story here is not just the trade, it's the fundamental shift. The expectation was that BKYI was just a hardware company, selling those little USB fingerprint scanners. The reality is their business is increasingly about software and recurring revenue through their IAM platforms, which is exactly what I2 Trust is going to be selling. This partnership validates that software model. It's also important to note this isn't happening in a vacuum. Just last week, on October 21st, the company announced its new EcoID 3 USB fingerprint scanner, an FBI-certified device. This shows they are still innovating their product line, which will be sold through this new partnership, creating a synergistic effect. So what does BioKey International actually do? For those who are just now discovering this company, BKYI is in the cybersecurity space, specifically focusing on identity and access management, or IAM. The core idea is simple: proving you are who you say you are before you get access to critical data, applications, or networks. Their big differentiator is identity-bound biometrics. Instead of just using a password, a phone token, or even a simple fingerprint scan, their platform is built to be flexible, allowing for multiple types of authentication factors. This includes biometrics, fingerprint, face, but also tokenless and phoneless options, which is critical for many high-security environments like call centers, industrial settings, or government facilities where employees might not have or be allowed to use a personal smartphone. Their flagship product, Portal Guard, is a platform that integrates all of this, providing secure access and multi-factor authentication for an organization's entire digital footprint, whether it's on-premise or in the cloud. The problem for BKYI hasn't been its technology, it's been its scale and its balance sheet. The company has historically been unprofitable, with a trailing EPS of negative $1.20. It's a classic micro-cap story. Good idea, good product, but a constant struggle for cash flow and market traction against giants in the cybersecurity world. This is why the stock was trading for less than $1. The market was pricing it for potential bankruptcy, not for a major European expansion. This brings us to the future outlook, and the tension between expectation and reality is everything right now. The new expectation, the one that has the stock up 129%, is that this i2 Trust deal is the turning point. The hope is that this is the first of many major distributor partnerships, that it opens the floodgates for revenue from the Nordic region, and that this newfound validation will allow them to sign similar deals in other parts of Europe and the world. If this one deal can add, say, several million in new, high-margin recurring revenue, it completely changes the company's financial profile. It could be the catalyst that finally pushes them toward profitability. This is the narrative that has 174 million shares flying. But what's the reality? The reality is that this is still a very small, very risky company. The press release, while fantastic, doesn't include any specific numbers. It doesn't say, this deal is worth $10 million in the first year. We don't know what the revenue impact will be or how long it will take to ramp up. The second, and more immediate risk, is dilution. The company is now worth more than twice what it was yesterday. Management, which desperately needs cash to fund operations, would be looking at this massive price spike and volume as a golden opportunity to do an at-the-market offering. They could raise millions of dollars in cash today, which would be fantastic for their balance sheet. But it would also mean issuing millions of new shares, diluting the very investors who just bought in at $1.80. This is the microcap catch-22. So we have two clear paths forward. Path one is the bullish case. The IT Trust partnership is a massive success. Revenue starts to pour in by the first or second quarter of 2026, and this new cash flow combined with their existing business finally makes the company self-sustaining. This initial spike is just the beginning of a long-term re-rating, and the stock establishes a new base, never seeing sub-$1 levels again. In this scenario, even a major individual brokerage account or a Fidelity Wealth Management advisor might start to see it as a viable, albeit speculative, holding. Path 2 is the bearish case. The celebration is premature. The revenue from the deal is slow to materialize, or it simply isn't large enough to offset the company's cash burn. The stock spike is used for a highly dilutive offering, the volume dries up in a few days, and the price slowly bleeds back down to $1 or lower as the excitement fades and the old reality of a negative EPS balance sheet returns. This is the unfortunate fate of many microcaps after a huge news spike. The next few earnings reports will be the most critical in the company's history. They must prove this deal translates into tangible, significant sales. For now, the momentum is undeniable, but the risk is just as large. This is not a stock for a set-it-and-forget-it Schwab Intelligent Portfolios account. This is a high-stakes, active trader's battlefield. Comment below if you think this partnership with IT Trust will lead to a buyout offer for BioKey International with